US retail sales are solid, leaving the Fed in no hurry to cut rates. China's consumers remain very cautious. Taiwan's GDP is surprisingly strong, and India is planning big sales tax reforms. That's coming up in our 5 Things in 5 Minutes on Monday, August the 18th. And in our deep dive interview, ANZ Senior China Strategist Zhaopeng introduces us to a new word for an important problem in China, involution. That's to curl inwards.
Many people use it to describe the destructive competition that doesn't lead to any meaningful rewards.
But first, in 5 and 5 with ANZ, data out on Friday night showed US retail sales grew 0.5% in July, and the June figure was revised up to 0.9%. ANZ head of G3 Economics, Brian Martin, says it shows there's still strong momentum in US consumer spending.
Yes, there are some tariff effects, but consumers are still hanging in there. And on that basis, I think the Fed continue to be patient with regards to rate cuts. We think that rate cuts are going to start in September with a 25 basis point reduction, but we don't think that they need to necessarily rush through a series of rate cuts. Our forecast is that there will be 2 25 basis point rate cuts this year.
As of 4 a.m. Sydney Melbourne time, the S&P 500 and the Nasdaq were closed and down 0.3% and 0.4% respectively from Thursday. The 10-year US Treasury yield rose 3.5 basis points to 4.33%. Gold was flat at $3,383 an ounce. West Texas oil futures fell 1.8% to $61.98 US a barrel. The US dollar index fell 0.4%. The Aussie dollar rose 0.2% to 65.07 US cents. And the Kiwi rose 0.1% to 59.22 US cents. Number 2. There was a big dump of data out of the Chinese economy on Friday, showing consumer spending and domestic demand remains weak, but production and exports are strong. Here's ANZ Senior China Strategist Zhaopeng.
Export-related activities such as trade and industrial production remain steady, but domestic demand-related activities such as retail sales, fixed assets investment were all weakened. Basically, I think it's due to the very weak demand side in the economy.
Number 3. India's leader, Narendra Modi, has signalled big changes to a large number of different goods and sales tax rates. Here's ANZ economist Dheeraj Nim to explain.
This is an important reform, as it was promised when GST was adopted that the multiplicity of tax rates that have prevailed until so far would eventually be simplified into less number of tax rates. That makes compliance much easier, and it makes the business environment certainly much more predictable.
Number 4. Taiwan reported extraordinary GDP growth of 8% in the June quarter, thanks to massive growth in exports and investments. Here's ANZ economist Bansi Madhavani.
Policymakers have now revised Taiwan's 2025 growth forecast to 4.45%. But we think that the outlook is more upbeat than official forecasts. 2 reasons for that. 1, we assess that there is a structural rise in demand for semiconductors. And 2, expectation is that the impact of US's semiconductor tariffs will be minimal for Taiwan, as many leading companies are likely to be exempt. We are therefore optimistic about Taiwan's growth outlook and forecast GDP growth to be 6.2% this year.
Number 5. Malaysia's economy, meanwhile, isn't doing quite so well. GDP growth in the June quarter from a year ago was 4.4%. Now, that was unchanged from the March quarter. Here's ANZ economist Arindam Chakraborty on the outlook in Malaysia.
Looking ahead, global trade is facing some headwinds, which implies a further softening in external demand. That said, the government's targeted support for households is expected to provide a cushion for private consumption. And with a strong pipeline of projects, investment is emerging as the most reliable pillar of growth. On the policy front, Bank Negara Malaysia cut the policy rate by 25 basis points in July to help secure growth. But going forward, we do not foresee any additional easing unless there is a material deterioration in domestic demand conditions.
Arindam Chakraborty there. Now, in today's deep dive interview, ANZ Senior China Strategist Zhaopeng introduces us to a new word for an important problem in China, involution, to curl inwards. I asked him where it came from and what the Chinese government is doing about it.
The term involution was originally used to explain the persistency of labor-intensive farming activities in the rural village in China and in Asia. I think it got the widespread usage in China after the pandemic because the domestic demand has been very weak. So it's very hard to make profit or making money from the very hard working. Many people use it to describe this destructive competition that doesn't lead to any meaningful rewards. I think anti-involution is a push by the government back against such over competition.
And why does the government want to do anti-involution?
Currently, I think the China deflation spiral looks very severe at this moment. The biggest reason for deflation, I think, is involution, not the imported deflation from the rest of the world. If you compare with our NZ China commodity index with China PPI, you can find that there is a big gap since the beginning of this year. That means domestic involution is the biggest reason for China deflation. In the first half of the year, I think China growth number looks still good, 5.3%. But if you look at the nominal growth rate, it's very close to 4%. So the biggest reason is the deflation in the economy. So that's the biggest threat to China at this moment.
Can you give us some examples of those price wars and where that's playing out?
Okay, I think a lot of price wars in different sectors at this moment. The recent example is food delivery war. Meituan, Jingdong, and Taobao are the three biggest players for the food delivery industry. In the past 2 months, they gave very huge subsidies to consumer and making the price very, very low. But the platforms can pass through the low price to restaurants, to the delivery man. So it making this industry looks very disruptive because it's very hard to making money from deliver the services. The government has stopped the war in the food delivery sector, but I think there are other price wars in the economy at the same time, not only in the food delivery industry, but also in, I think, a variety of sectors.
And how cheap did it get to deliver food during this price war?
I can order milk tea at 0 price. I pay nothing for it. This made up of my lunch.
So how did the authorities stop this price war in the delivery sector?
The government has launched the revision to the current anti-unfair competition law and also the pricing law. I think, if you pay 0 for your lunch, that means it's quite below the cost. It's unfair market competition. So the government just advised them and called them to stop the war. So finally, these 3 platforms obey the rules and come back to normal for the industry.
Zhaopeng Xing there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Monday, August the 18th. Catch you tomorrow with a preview of the Central Bankers Shindig in Jackson Hole, happening later this week. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.